It's been a while since we talked about our index investment, and these days it is pretty clear that we are heading into an economic recession. So I thought it would be a good idea to update you on how our portfolio is performing. I also want to answer some questions that we have been getting about our strategy and how the market downturn could affect this investment. First, yes, we are still index investing. At the start of every month, we spend about $2,500 to buy shares of the VOO, and no, we will not be selling even if we are losing money in the short term. Here's why. First, this is an ongoing long-term investment for us. We plan to continue to consistently buy and hold VOO shares for years and years to come. Secondly, we are using a cost averaging strategy, which means that we will tranche our purchases. This allows us to ride the wave down and take advantage of lower prices as the market drops and average out a lower cost per share in the long term. For example, throughout the duration of 2022, we will allocate about $30,000 out of our pocket to buy VOO shares. If we would have just used all 30 grand in January in one shot, our average cost per share would be $439.25. But because the VOO share prices have fluctuated, our average cost per share is now down to just under about $402 per share. We currently own 67 shares of the VOO, and we have spent $26,934 out of pocket on this investment. On the day that I'm filming, the VOO is trading at around $357 per share, so if we sold everything right now, we would take a loss of about $3,015. But as I mentioned earlier, we're not planning to sell anytime soon. Here's a look at our VOO position tracker so you can see the breakdown of all of the tranches that I mentioned earlier. In the short term, we are expecting the VOO share price to continue to go down, and it's going to feel like we're losing money. But that's why we want to stick to the systematic strategy to remove those emotions. I also think that it's important to discuss the difference between a market crash and an economic recession. With a market crash, we see a change in people's perception of the value of companies. The amount people are willing to pay for shares as a multiple of the company's earnings reduces and share prices drop. With an economic recession, we see the effect on real people in the real world, as most of the population changes their spending habits to be more frugal. When people stop spending as much money as they were before, this can affect the actual earnings of a company. History shows us that usually a crash follows or coincides with a recession because it's this perfect storm of average people spending less money, therefore making companies earn less money, while at the same time, investors see what's happening and it makes them perceive the companies as being less valuable or having less growth potential in the future. Therefore, they're scared to own the shares of the companies, so they sell and drive down prices. Side note, if you have never watched the Ray Dalio video, How the Economic Machine Works, I highly recommend that you watch it. Vox reports that it often takes a year before the NBER committee makes an official announcement that we are in a recession. Chris and I personally believe that we are at the start of the next down cycle. And even though that can be really scary in the short term, we also see this as an opportunity to buy assets at discounted rates. And this is going to benefit us in the long term because ultimately we believe in the American economy and we think that things will cycle back to normal eventually. So we actually want VOO prices to drop. We want our cost average to continue to go down because eventually we will ride the wave back up again and reap the benefits. So some hardcore value investors might say that we are breaking the rules of value investing by buying an index ETF, and technically that is true, but here's why we do it anyway. First, our index investment represents less than 4% of our overall investment portfolio. The vast majority of our nest egg is dedicated to true value investing opportunities where we assess individual assets to determine their intrinsic value and set a strike price at a discount to that value. Beyond this, Chris and I have sometimes had like this overwhelming bias to be ultra conservative with our investments. Now, we started doing index investing back in September of 2021 as a way to get some of our money working for us that otherwise wasn't. It is a systematic process that removes emotions that can interfere with success in investing, and it adds a bit of diversification to our portfolio. The VOO is the Vanguard 500 Index Fund ETF. There are several popular index ETFs to choose from, so when we were deciding which one we wanted to go with, we compared the top three and looked at the metrics of one-year performance percentage, expense ratio percentage, and the annual dividend yield percentage. So based on that, we decided that the VOO was the best fit for us. If you decide to invest in an index ETF, no matter which one you choose, you should get the benefit of low management fees. We think there are going to be lots of great investment opportunities out there soon. So now is the time to make sure that you have your plan and get prepared to buy when the time is right. If you want to stay up to date with what we're doing, be sure to check out these other videos and subscribe. Remember, earn more, spend less, and invest the rest, and I'll see you next time.